Each newcomer wonders what features a trader should have to achieve outstanding success in the Forex market. One thinks this over and over again, dreaming of incredible profits, while sometimes educating of these skills takes a lot of time and effort. But can you imagine that there are people who have innate trader's instincts? That's the case of the most powerful trader on Wall Street you surely never heard of. Steve Cohen is an American hedge fund manager who was ranked by Forbes as the 106th richest man in the world and the 35th overall in the United States. He's the founder and CEO of Point72 Asset Management, a family office located in Stamford, Connecticut. As of February 2021, he has an estimated net worth of $10.2 billion, and he purchased the New York Mets for $2.4 billion in 2020. Cohen was also the founder of the now defunct SAC Capital Advisors, one of the most successful hedge funds ever. He is famous for having supernatural abilities to make money under any market conditions. Business Week magazine named Cohen the most influential trader on Wall Street. Cohen made a fortune as a hedge fund manager. His mother was a piano teacher, and his father earned a middle-class wage at a women's apparel manufacturing company in the Manhattan Garment District. The Cohens are a Jewish family that raised 7 children, including Steve. He studied economics at the University of Pennsylvania, played poker, and became interested in the stock market. In 1978, Cohen got a job at Gruntel, where on the first day he earned $8,000 for the company. Being a top day trader, Cohen made about $100,000 a day for the organization. By 1984, he managed a portfolio of $75 million and a group of 6 traders. On his account, there were transactions that helped Gruntel to cover losses incurred due to the operations of other traders. In 1992, after leaving Gruntel, Cohen opened the SAC Capital Partners hedge fund, investing $20 million of his own funds there. Today, the company manages more than $12 billion. At that time, the hedge fund industry was still relatively small, and the bull market of the 1990s was just warming up. In 2010, the company became the subject of an insider trading investigation launched by the Securities and Exchange Commission (SEC). While Cohen himself was never charged, the firm pled guilty to trafficking in non-public information and was forced to return investor capital and pay $1.8 billion in fines. SAC was officially closed in 2016 when Cohen began serving a 2-year ban on managing other investors' money. The ban expired in January 2018. SAC Capital Partners staff now counts more than 600 people. Nevertheless, Cohen still makes many deals himself. He starts his working day at 8 a.m. and tracks market charts on his monitors, giving ideas to employees. About 15% of the company's profit is obtained from operations performed by him. Cohen said that believes stock moves are 40% down to the market, 30% down to the sector, and 30% down to the stock. This is important because even if you have a stock that is doing well, it will not perform if the sector and market are down. His best trader makes wins 63% of the time. Most traders, according to him, win between 50 to 55% of the time. This rate is completely acceptable, as you will never win all of the time. To make this profitable, you have to make sure losses are as small as they can possibly be and profits as high as they can be. Finally, you can't control the market, but you can control your reaction. By this, Cohen means that you need to be adaptable. The way you trade should work with the market, not against it. Cohen's success with SAC was predicated on high-risk, high-reward trades. His portfolio rode the late 90s dot-com bubble to 70% returns and earned another 70% when he shorted those same stocks when the tech bubble burst in 2000. In 2007, SAC took a $76 million stock position in Equinix. After the company released positive earnings a month later, its share value grew by 32%. At the beginning of 2012, Cohen made a $26.7 billion bet on Ardia Biosciences. When AstraZeneca made a deal to purchase the company 3 weeks later, the acquisition increased Cohen's position on Ardia to almost $40 billion. SAC took long positions in Whole Foods in 2009 and 2010 for $49 million and $78 million, respectively. Both times as a result of favorable operational changes made within the supermarket chain, the stock price soared. Conversely, the firm also sustained a number of significant losses on the bets it made over 2 decades. A series of multi-million-dollar long positions made throughout the 2000s on pharmaceutical companies include IM Clone Systems and Human Genome Sciences was ultimately unsuccessful and costly to the portfolio. Though he's called a professional of short-term transactions and the king of hedge funds, Steve Cohen's strategy is far from rocket science. One can even call it a supernatural luck, but as a matter of fact, he combines lots of information coming at him from all directions with a good feel for how the markets are moving to make market bets. He prefers to get a lot of support, so he's definitely not a lone wolf as many other traders fighting their own battles. As it was mentioned by his colleagues, he sometimes managed to enter up to 300 transactions per day. Not delving into any economic details, the head of SAC believes that the biggest profit can be gained as a result of stop-loss monitoring of the quotes during the working day. If you constantly watch the changes in the charts, after a while you can learn to predict the market movement. For years, Steve Cohen has bought and sold shares of companies not even knowing their profile. Cohen doesn't like to waste time on trifles like selecting undervalued or overvalued assets. Steve Cohen once said that he has had a passion for stocks since childhood. He didn't invest in stocks just for the money, but also because he loved what he did. He says it's important to keep oneself excited about trading in the stock market and investing in funds. Passion can help one make decisions well when it comes to success in the stock market. Sharing his priceless trading experience, Steve Cohen advises one to define clearly what they are and not try to be what they're not. Being a day trader, trade during the day. If you're an investor, then be an investor. It's like a comedian who gets up on stage and starts singing. Steve Cohen believes psychology plays a big role when it comes to investing. He had even hired a psychiatrist to help him get through panic regarding trading risks. The market is always changing because of the investors and their emotions regarding circumstances. It's hard to keep calm during such tiring times. With panic all around, anyone can slip into making the wrong decision and face huge financial loss. He once said that one cannot control what the stock market does, but one can control reaction to the market. It's important to keep your attitude and reaction in check and maintain calm before taking major investing decisions. Cohen is a very wealthy man, but he didn't grow up in a wealthy family. If he was going to become rich, this was something that he would have to do on his own. This is precisely what he's done. According to Cohen, you should put your entire focus on investing if you want success in that area. Steve Cohen encourages investors to make informed decisions with investments. It is important to not follow other trading styles. Everyone should do their own research and come up with their own way of trading. He says his firm encourages clients to identify their strengths and weaknesses. They're encouraged to identify what they like investing in. Look at market bets that get your blood pumping because you know about it too well. It's important to learn from mistakes and make well-judged decisions. Steve Cohen has been one of the pioneers when it comes to investing and earning profits. One thing to take back from his style of investing would be to develop a passion for investments, maintain calm and invest with an open mind. Do your research well before investing and learn from any mistake made. Maintain focus without wavering and don't let market panic get to you. Making hasty and uninformed decisions can ruin your investments. What is your opinion about Steve Cohen? Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Don't forget to subscribe to our YouTube channel, hit the bell icon for more updates and notifications. Stay safe and we'll be back soon with another video.